Ever wondered how you could invest like Warren Buffett, the Oracle of Omaha himself, and build lasting wealth? What if I told you that two of Buffett's cornerstone investments are not only accessible to you right now, but are also screaming buy for long-term growth and stability? We're diving deep into two absolute titans of their respective industries. First, we'll explore a legendary beverage company, a true leader in refreshment whose brand is recognized in every corner of the globe and whose dividends have flowed as consistently as its iconic drinks. Then we'll shift gears to a pioneer in the digital payment space, a financial technology giant that powers countless transactions every single second. If you only watch one video today, make sure you watch this one, all the way till the end, because the insights we're about to share could fundamentally change your investment portfolio for the better. These aren't just any stocks, these are Buffett-backed behemoths with wide economic moats and a history of exceptional performance. We're gonna break down exactly why they're in his portfolio and why they deserve a spot in yours. So, get ready to take some notes. And, hey, if you're finding value already, do me a huge favor. Hit the like button, share the video with fellow investors, and leave your thoughts in the comments below. Most importantly, subscribe to the channel and hit that notification bell so you don't miss out on the next important financial investing update. Let's get into it. Alright, let's kick things off with our first Buffett-endorsed champion, a company that needs almost no introduction. The Coca-Cola Company, ticker symbol KO. This isn't just a beverage company, it's a global institution, a masterclass in branding, and a dividend king that has been quenching thirsts and rewarding investors for generations. When you think about enduring businesses, Coca-Cola is often one of the first names that comes to mind, and for very, very good reasons. Warren Buffett himself has famously said, "It's better to buy a wonderful company at a fair price than a fair company at a wonderful price." Coca-Cola for Buffett epitomizes that wonderful company. Its market leadership is virtually unparalleled in the non-alcoholic beverage industry. Think about it. Coca-Cola products are available in over 200 countries and territories. That kind of global reach is staggering and creates an immense competitive advantage. This extensive distribution network is a fortress. Building something comparable from scratch would cost an astronomical sum and take decades if it's even possible today. This network ensures that whether you're in a bustling metropolis or a remote village, a Coke is often within arm's reach. This ubiquity is a cornerstone of its market leadership, making it incredibly difficult for competitors to truly challenge its dominance on a global scale. Beyond the physical distribution, Coca-Cola's portfolio of brands is a powerhouse. While the flagship Coca-Cola brand is iconic, the company owns and markets over 500 brands, including other sparkling beverages, waters, juices, teas, and coffees. This diversification within the beverage sector allows it to cater to a wide array of consumer tastes and preferences, adapting to changing trends while maintaining its core strengths. The brand strength of Coca-Cola is legendary. It's consistently ranked as one of the most valuable brands in the world. This isn't just about a logo or a catchy jingle, it's about the deep emotional connection the brand has forged with consumers over more than a century. Coca-Cola has expertly woven itself into the fabric of celebrations, moments of refreshment, and everyday life, creating a level of brand loyalty that is the envy of marketers worldwide. This powerful branding translates directly into pricing power. Coca-Cola can often command a premium price for its products because consumers trust the quality and have a positive association with the brand. This ability to influence pricing, even by small amounts, can have a significant impact on profitability when scaled across billions of servings sold each year. It's a subtle but incredibly potent aspect of their business model. Now let's talk about something near and dear to many long-term investors' hearts, especially those following Buffett's playbook: dividends. Coca-Cola is a dividend king, meaning it has increased its dividend payouts for over 60 consecutive years. Think about that consistency. Through recessions, market crashes, and global upheavals, Coca-Cola has continued to return more cash to its shareholders year after year. This track record of dividend growth is a testament to the company's financial strength, its predictable cash flows, and its management's commitment to shareholder returns. For income-focused investors, Coca-Cola offers a reliable and growing stream of passive income, which can be incredibly valuable, especially in retirement or for reinvestment to compound returns over time. Buffett's Berkshire Hathaway is one of the largest shareholders of Coca-Cola, and it's been a core holding for decades. Why? Because it fits his investment philosophy perfectly. Coca-Cola possesses what Buffett calls a wide economic moat, a sustainable competitive advantage that protects its market share and profitability from competitors. This moat is built from its brand, its distribution network, and its scale. The business itself is relatively simple to understand. They sell beverages that people enjoy and consume regularly. This predictability is something Buffett highly values. He prefers businesses with consistent earnings power over those with flashy but uncertain growth prospects. Coca-Cola provides that steady, reliable performance that forms the bedrock of a long-term investment strategy. Furthermore, Coca-Cola's management has historically been adept at navigating changing consumer preferences. While sugary drinks have faced headwinds, the company has been actively diversifying its portfolio, investing in healthier options like Coca-Cola Zero Sugar, premium waters, sports drinks, and coffee brands like Costa Coffee. This adaptability is crucial for long-term survival and growth. The sheer scale of Coca-Cola's operations also provides significant efficiencies. From sourcing raw materials to manufacturing and marketing, the company benefits from economies of scale that smaller players simply cannot match. This allows them to maintain healthy profit margins even in a competitive landscape. Now, let's turn our attention to our second Buffett-backed powerhouse, a company that is literally at the fingertips of billions of people every single day, Visa, ticker symbol VAV. If Coca-Cola represents the old guard of enduring businesses, Visa represents the new guard, a dominant force in the ever-expanding world of digital payments. And believe me, its position is just as formidable. Visa isn't a bank, it doesn't issue cards or lend money. Instead, it operates one of the world's largest retail electronic payments networks. Think of it as a toll road for money. Every time you use a Visa-branded card, whether it's a debit, credit, or prepaid card, Visa's network is likely facilitating that transaction, and the company takes a tiny slice of the action. This business model is incredibly powerful and scalable. The dominance of Visa in the payment processing industry is astounding. It, along with MasterCard, forms a duopoly in many parts of the world. This creates an enormous barrier to entry for potential competitors. Building a similar global network of merchants and financial institutions would be a Herculean task. The network effect is a crucial component of Visa's strength. The more consumers who carry Visa cards, the more merchants want to accept them. And the more merchants who accept Visa, the more valuable Visa cards become to consumers. This self-reinforcing cycle makes Visa's network increasingly powerful and difficult to disrupt. Warren Buffett's Berkshire Hathaway also holds a significant position in Visa, and it's easy to see why it aligns with his investment principles. Visa has an incredibly wide economic moat, protected by its brand recognition, its vast network, and the high switching costs for banks and merchants to move to a different system. The growth potential for Visa remains immense, despite its already massive scale. We are still in the relatively early stages of a global shift from cash to digital payments. In many emerging markets, cash is still king, representing a huge runway for growth as these economies continue to develop and digitize their financial systems. Think about the rise of e-commerce. Every online purchase, every app subscription, every digital service often relies on payment networks like Visa. As e-commerce continues its relentless growth trajectory worldwide, Visa is a direct beneficiary. It's like owning a piece of every online store's checkout process. Moreover, Visa is not standing still. The company is constantly innovating and investing in new technologies, including areas like B2B payments, cross-border transactions, and value-added services like fraud prevention and data analytics. These initiatives open up new revenue streams and further solidify its position in the evolving payments landscape. The financials of Visa are simply stunning. The company boasts incredibly high profit margins. Because its business model is asset-light, it doesn't have to build physical stores or manage vast inventories. Each additional transaction processed on its network adds significantly to the bottom line. It's a highly efficient cash-generating machine. Revenue growth has been consistently strong, driven by the increasing volume of payments processed and the number of transactions. Even in a slowing economy, people still need to buy essentials, and increasingly, they're doing so with cards or digital wallets linked to Visa's network. This resilience is a key attraction. Visa generates a tremendous amount of free cash flow. This cash can be used to invest in growth, make strategic acquisitions, pay dividends, which are growing, and buy back its own shares. Share buybacks in particular have been a significant way Visa returns capital to shareholders, increasing earnings per share over time. For long-term investors, Visa is often considered a no-brainer stock because it's riding several powerful secular tailwinds. The decline of cash, the rise of e-commerce, and the increasing digitization of financial transactions are trends that are likely to continue for many years, if not decades, providing a strong foundation for Visa's continued growth. The company's brand is globally recognized and trusted. Now that we've highlighted two of Warren Buffett's favorite stocks, let's dive into a concept that underpins his entire investment philosophy, the power of compounding. You might have heard Buffett himself describe compounding as the eighth wonder of the world, and for good reason. When you invest wisely and give your investments time to grow, the results can be astonishing. Imagine starting with a modest investment of $1,000. If you achieve an average annual return of 10%, that initial $1,000 would grow to over $2,500 in just 10 years. Extend that horizon to 20 years, and you're looking at nearly $7,000. But here's where it gets truly exciting. After 30 years, your $1,000 investment would balloon to almost $17,500. That's the magic of compounding in action. The key to harnessing this power lies in two simple principles: time and consistency. The longer you allow your investments to grow, the more dramatic the compounding effect becomes. This is why starting early and staying committed to your investment strategy is crucial. Even small, regular contributions can result in significant wealth over time. Buffett often emphasizes the importance of reinvesting your earnings. When your investments generate dividends or interest, reinvesting those earnings rather than withdrawing them accelerates the compounding process. It's like a snowball rolling down a hill, gathering more snow and increasing in size as it goes. But compounding isn't just about the numbers, it's a mindset shift. It encourages patience, discipline, and a long-term perspective. Instead of chasing quick gains or reacting to short-term market fluctuations, you focus on building a solid foundation for your financial future. Remember, even the most successful investors faced market downturns and challenges. What sets them apart is their ability to stay the course and let compounding work its magic. By investing in high-quality companies with strong fundamentals, like Coca-Cola and Visa, you position yourself for steady, sustainable growth. So, whether you're just starting your investment journey or looking to optimize your strategy, keep the power of compounding in mind. It's not just a financial principle, it's a pathway to achieving your long-term financial goals. So there you have it, two phenomenal, Warren Buffett-approved stocks, Coca-Cola and Visa, that offer a potent combination of stability, growth, and income. These aren't just fleeting trends, they are established leaders with wide economic moats, poised to continue delivering value for years to come. Adding these kinds of quality companies to your portfolio can be a game-changer for your long-term financial future. Remember, investing like Buffett is about identifying wonderful companies at fair prices and holding them for the long haul. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. See you in the next one.